Okay, so ready to kind of dive into the world of stock picking?
Always ready to talk stocks.
We've got this book, and it's got charts and analysis going all the way back to the 1880s.
Yeah, the author really digs into history to figure out what makes a company successful, those companies that are set to really take off.
Totally. And they've got this system, they call it Can Slim. It's like almost like a checklist for checking out stocks. And the first thing on the list is C, current earnings. They're a big deal in this book.
Oh, yeah. And not just good earnings. We're talking like significant increases. Think at least 25%, even more year over year. That's the kind of growth that gets investors excited.
Right, because who wants to settle for like tiny gains, right?
Exactly. And it's not just about one good quarter either. Consistency is key here. The book really emphasizes looking for consistent growth year after year for like the past 3 years at least.
So a track record, not just a one-hit wonder.
Exactly. You want to see that they're in it for the long haul.
Makes a ton of sense. And that makes me think about the N in Can Slim, newer companies, newer products, new management, that kind of thing.
Yeah, this is where it gets really interesting. The book suggests that these newer companies, they often have this agility, this innovation that bigger, more established companies, they sometimes struggle with. They can really shake things up.
Right, like finding that diamond in the rough, that hidden gem.
Yeah. But even the best companies need the right environment to really thrive, right?
Totally. So then how does the market factor in?
That's where understanding the market comes in. It's like even a game-changing product needs the right market conditions to really take off. And that's where the book's insights on charts come into play.
Charts. Learning to read those is like learning a whole new language.
It is, but once you get it, it's like you've got this secret decoder ring. The author actually uses some really interesting examples. Like, remember the dot-com bubble?
Oh.
They show how understanding certain patterns in the market, like recognizing what they call distribution days, could have helped people avoid some big losses.
So it's about recognizing those warning signs, like, yeah,
Exactly, like those distribution days. They're like, think of it like a tug of war, lots of back and forth, but no one's really winning. That can mean that the big investors they're starting to sell off could be a sign of trouble ahead.
so by learning these signals, we can protect ourselves, make smarter choices.
Right. Now, another trap people fall into is thinking that if a stock price is low, it's automatically a good deal. But the book really challenges that.
Yeah, I've heard that before. Buy low, sell high.
Right, but a low price, sometimes that can be a sign of problems within a company. This book, it really wants you to look deeper, beyond the price tag.
So it's about understanding the company's value, not just its price.
Exactly. Don't just look at the sticker price. Look under the hood, so to speak.
I like that. And speaking of looking deeper, the book also talks about not spreading yourself too thin, not being over diversified.
Yeah, they argue that it's better to really understand a few companies well rather than trying to keep track of tons of different stocks.
Makes sense. You can't be an expert on everything.
Exactly. It's about quality over quantity. Focus your energy. Become an expert in your area.
Yeah, like that saying, jack of all trades, master of none, right? It's like focus your energy, become an expert in your area.
Exactly. And that actually reminds me of the S in CAN SLIM, which stands for supply and demand.
Oh, right. Yeah, we touched on that a bit earlier.
Right. But it's a bigger deal than you might think. Just like with anything else, the price of a stock, it goes up and down based on supply and demand. If everybody wants a piece of the action, well, the price is going to go up.
Right, like a rare collectible or something.
Exactly. And the book even talks about how, like, stock splits, which you might think are good, can actually backfire.
Wait, really? Why is that?
Well, when a company splits its stock, it's basically creating more shares, right? So even though it might seem like a good deal to get in at a lower price, having more shares available can actually dilute the value, and the price might not go up as much as you'd hoped.
So it's about striking that balance, making the stock accessible, but also kind of like maintaining that sense of scarcity.
Exactly.
Interesting. Okay, so moving on to L, leader or laggard. Seems pretty obvious. We want the leaders, right?
Right. We're looking for the companies that are like leading the pack, the ones setting the pace for their industry. The book really stresses the importance of like looking beyond just the current price of the stock.
So how do we do that? What should we be looking at?
Relative strength. Instead of just looking at the price tag, you look at how the stock is performing compared to other stocks in the market.
So like comparing apples to apples, basically.
Yeah, exactly. And there's a rating for that. It's called the relative strength rating. A high rating, like 80 or above, that tells you the stock is doing really well compared to the others. It's like it's showing some real muscle.
Okay, so it's a way to cut through all the noise and find those companies that are really outperforming.
Exactly. It's all about finding those winners.
Got it. All right, let's circle back to the institutional sponsorship. We talked about it a bit, but it sounds like it's a pretty big deal.
It is. These big institutional investors like mutual funds and pension funds, they have a ton of money to invest. And when they make a move, it can really move the market.
They're like the big players at the poker table.
Right. And the book makes the point that when you see a lot of institutional sponsorship, it can be a good sign, Like, these guys are the pros, so if they're investing in a company, it means something.
Like a vote of confidence from the experts.
Exactly. And the book actually gives some tips on how to spot those companies that are attracting that kind of attention. You can kind of ride their coattails in a way. Smart. Okay, so that brings us to the M in Can Slim market direction.
Right, and we've been kind of dancing around this all along, but it's really the foundation of everything. Because even the best company, the most amazing product, it's going to have a tough time if the market's tanking.
So how do we make sure we're not swimming upstream, so to speak?
The book really emphasizes paying attention to the market indexes, like the Dow Jones or the S&P 500. It's about learning to read the signs, seeing those signals that tell you if the market's about to take a dive or maybe start climbing.
So it's like having a map of the overall market terrain.
Exactly. When you understand those bigger forces that are at play, you can make smarter decisions. It's not just about picking individual stocks, it's about understanding the whole game.
That's a good way to put it. Okay, so beyond the whole Can Slim system, something else really stood out to me in this book, and that's the emphasis on individual investors, regular people like us. Yeah, the author's really big on that. They truly believe that anybody can learn this stuff and become a successful investor. It's about taking control of your own financial future.
Right, not relying on some financial advisor to do it for you.
Exactly. It's about educating yourself, becoming your own expert.
I like that. And the book doesn't shy away from talking about the mistakes that people make,
Oh,
right?
yeah. They go into that in detail using real-world examples to show how even smart people can make some pretty big investing blunders.
It's like they say you can learn from your mistakes, but it's even better to learn from other people's mistakes.
Absolutely. And one of the biggest takeaways for me was how easy it is to fall for those common investing myths.
Like the idea that a low stock price is always a good deal.
Exactly. And the book really drives home the point that, sometimes a low price is a red flag. It could mean there are underlying problems with the company.
It's a good reminder to do your homework, look beyond the surface.
Absolutely. And another myth they debunked is this idea that you need to have a ton of different stocks in your portfolio.
Right, they're not big on over-diversification, are they?
No. They make a compelling argument for focusing on a smaller number of companies, but really understanding those companies inside and out.
Quality over quantity, right. Become an expert in your niche.
Exactly. Don't try to be a jack of all trades in the stock market.
Right.
Focus your energy, do your research, and invest in what you understand.
Now, even though this book is mostly about stocks, they do touch on other types of investments, like mutual funds and bonds.
They do, and I think they do a good job of presenting a balanced view, explaining the pros and cons of each option. Because it's all about having a diversified portfolio, right? You don't want to put all your eggs in one basket.
Exactly. You need a good mix of investments to weather those market storms.
Exactly.
Right? Like different tools in a toolbox. But even with a good set of tools, it's important to, understand the environment you're working in. The book spends some time on those bigger economic forces that can really affect your investments.
Oh, absolutely. Things like inflation, what the Fed is doing with interest rates, even what's happening with government policies, all of that plays a role.
It's like checking the weather forecast before you go sailing, right?
Yeah.
You want to be prepared for those rough seas.
Exactly. And this book, it actually gives you some guidance on how to interpret those economic indicators so you can adjust your strategy accordingly. It's all about being flexible, ready to adapt when the market throws you a curveball.
Makes sense. And then there's the mental game of investing, which I think a lot of people underestimate. Fear and greed, those emotions can really mess you up.
Tell me about it. We've all been there. You get caught up in the hype when the market's going crazy, or you start panicking when things take a dip. The book really drives home the point that letting your emotions drive your decisions, that's a recipe for disaster.
So how do we stay level-headed? How do we keep those emotions in check?
Discipline, that's the key. The author talks about the importance of having a plan, a set of rules that you stick to no matter what's happening in the market. It's like Think of it like a diet or an exercise plan. You're not going to see results if you just do it when you feel like it. Right? Consistency is key.
Yeah, got to stick with the program. Don't let those emotions throw you off course.
Exactly. Now, as we kind of wrap up our look at this book, there's one more thing I want to highlight. This book, it's not just a list of rules to follow blindly. It's more like it's trying to teach you how to think like an investor.
Right, to become a student of the market.
Exactly. It's about understanding those fundamental principles, the things that always seem to hold true, and then using that knowledge to make your own decisions.
So it's not about trying to predict the future. It's about understanding the forces that shape it.
Absolutely. And it's important to remember investing is a journey, not a sprint. You're going to have good days and bad days. But the more you learn, the more you adapt, the better you'll be able to handle those ups and downs.
It's about staying curious, staying informed, and not being afraid to ask questions. Speaking of questions, as we wrap up this deep dive, I want to leave our listeners with one to ponder. What are some of the most common mistakes investors make? And how can you, armed with the knowledge from this deep dive, avoid those pitfalls and set yourself on the path to financial success? It's something to think about.
Great question. And remember, the information in this book, combined with your own research and due diligence, that's a powerful combination. Knowledge is power, especially in the world of investing.
Couldn't agree more. Well, on that note, happy investing, everyone.